What's up, guys? Javier here with the Geopolitical Investing Cafe, just with a little market check in. And over the next few days, I'm going to be laying out some of my strategies, especially the Iran strategy. But what another crazy day it was in the market. Check out FinViz, guys. Not as bad as yesterday. Some companies are in the green again. Most of them are in red, but Tesla, Amazon, Nvidia, Meta, come Palantir, we're slightly up from the wild lows. And guys, it's a wild ride. I did absolutely nothing today. I didn't buy anything. I didn't sell anything. And for me, I want to sort of wait until the dust settles. I think we're still unwinding this correction or mini correction that's been going on over the last few days. Again, I can't predict what's going to happen, but I think that by the end of the week, hopefully, we should have some sort of sense of where the new supports are, where the new resistances are, and so on and so forth. In the meantime, I'm just thinking through my macro strategies. And of course, this is all subject to change. And the reason why I like making videos and building this community, this very small community, is that people can have a dialogue with me and tell me where I'm wrong, tell me why I'm crazy, or tell me why you think I'm right, and we can get rich together. This channel's all about getting rich on the markets. And to me, low stock prices are a great way for the common person, the common man, so to speak, to have an entree into these markets. It's the same in the housing market. It's the same in the stock market, commodities, and so on. The lower prices are, that seems to me to be our entry point. But you must have a strategy. As it said, even a moron with a plan can beat the smartest person who doesn't have a plan. So, strategies I'm thinking about, guys. What's going on in the world? Well, people are spooked because of tariffs. And even I was reading this article today on Zero Hedge about Trump's tariffs. And it's all over the place because Trump, I don't think, knows what he's going to do. He's reconsidering them. He's putting new ones on. Just now, an article on Zero Hedge came out. Trump reconsiders Canada tariffs after Ontario folds, suspends electricity surcharge. After early responding to President Trump's threats with one more sound and fury, I want to send more electricity to the U.S., Ford said during an interview with CNBC, but cutting off power exports remains a tool in our toolkit. I think everybody is saying extreme things. They're all giving their most extreme positions so that hopefully they can meet in the middle at the bargaining table. Markets are spooked. And rightfully so, guys, because here's my take on tariffs. It's a very Austrian take, and while I support Trump in a lot of things, I've always been dead against this tariffs play. Here's why. The supposed design of tariffs, and this is not so, and the people who are instituting the tariffs know this full well. The real reason for tariffs is to enrich some business people. Adam Smith knew this. Certain heads of companies, certain stockholders, and so on will be enriched by tariffs because they will have exclusive selling rights just due to the fact that it will be too expensive to buy from other companies in other countries. But the supposed benefits of tariffs is that it brings more business and more jobs to the United States. Just a cursory analysis will show why this is totally fallacious. Say a company chooses to make, let's say, screwdrivers in China. Well, the reason the company chooses to make screwdrivers in China is because for whatever reason, whether lower regulations, whether lower cost of production, whether lower wages, that company saves money. And if in addition to transportation costs of getting that stuff back over here, it's cheaper for them to produce those products abroad than it is here, then they will produce them abroad. Now, the company saves money. Let's say they save $100. Where does that $100 go to? Well, it goes into the cash accounts of the company, What does the company do with that cash? Either they will spend it in the economy, which means that more people in the country are enriched, or they will invest that money, which means that we have more capital goods, and therefore more jobs, production. Therefore, either people are directly enriched, or the goods that we invest the money into are cheaper now because there are more of them. And of course, more goods means cheaper prices, all things being equal. So I hope you understand this. It's very simple. The money that companies save going abroad will get reinvested into the economy. Now, if there are tariffs, yes, jobs are created here, but the money that was going to be invested is now gone in those higher prices. The higher prices, of course, that the companies have to pay to produce them here, and ultimately the higher prices that consumers pay. Of course, this is all uneven. Some people will benefit. Some people will fall into challenges due to it. But at the end of the day, all you're doing is transferring the cost. But you're not conveying a net benefit to this country or to the people of this country. It's a fallacy of Keynesian economics, because Keynes said job creation is what matters. Employment is what matters. So his theory was, if you bury money under sand and then have people dig it up, well, that's employment. You're increasing employment, so that's a good for society, right? No, it isn't, because there's no actual new production taking place in that employment. Employment is not the end-all and be-all. And why is that? Because people get a job for a reason. They get it to gain an income, to therefore be able to spend on goods and services. So it's the amount of goods and services that are the issue. And tariffs do not increase the supply of goods and services to a country. They diminish the supply of goods and services because we can no longer import them. So just from a very elementary standpoint in elementary economics, we know that tariffs are not good. They are goods and services destroying, not goods and services creating. So it's a huge mistake, and anybody who knows anything about business and economics is, of course, spooked by the tariffs, which is why you're seeing a fall in the stock market, because people are saying, we don't want to have new investment. We don't want to invest our cash until we see what the consequences of this are going to be, not only in Main Street, but to the corporations affected. They're going to be paying more now to produce the same amount of goods. So, not a good look. Now, the whole point of this channel is, how are we going to benefit? What am I looking at? And I'm looking at a few things, guys. First of all, volatility. The uncertainty of Trump. And if you look at our interview with Jim Rogers last year, he talks about the fact that no one knows what Trump's going to do. Even Trump doesn't know what Trump's going to do. So everything's very uncertain. That's volatility. I'm looking at the VIX, guys, and I'm looking at whether to buy call options on the VIX. Of course, the VIX is an index that measures volatility. Or I'm looking at ETFs in VIX. That's one thing I'm looking at. Also, what's going to go on with China? If China really retaliates these tariffs, what's going to happen to commodities prices, and most importantly, soybeans and pork? Could they see price swings? Could we benefit from that? I'm looking at this, and I'm looking at all the different angles to invest in this. Of course, if you have any advice on this, please do chime into the comments. We can share our ideas together. What's going on with tech? Is some tech being oversold now? And perhaps Nvidia. What's going on with Apple and Microsoft? I was looking at that. Of course, they have strong moats, as Warren Buffett talks about. They have strong pricing power and diversified revenue streams. If tariffs impact supply chains, how are these tariffs going to impact supply chains, guys? If tariffs impact supply chains, there may be a short-term hit, but long-term, these companies can, of course, Apple and Microsoft, and will pass costs on to consumers. And if they get oversold, these are going to be huge buying opportunities. So Nvidia, Microsoft, Apple, are these going to get oversold due to the volatility? This will be a chance to buy. And of course, I'm looking at ProShares Ultra VIX short-term futures ETF. Of course, that's going to measure volatility. I'm also going to lay out my strategy regarding foreign policy and geopolitics very soon. This may be a chance to get set up and geared up for that levered strategy. I will be releasing other videos on that very soon. So guys, these are just some wild ideas that I'm putting out there. I wish you happy trading, happy investing. And if you like my videos, if you like the conversations that we're having, please do like the videos, subscribe if you like the videos, comment on them, help us get out there to the algorithm. Let's have a conversation about how the common man, people who are not the super rich, can get rich in these markets that are presenting us with great opportunities to do so. Till very soon, this is Javier with the Geopolitical Investing Cafe, bidding you a wonderful rest of the evening. Happy trading.